Right, hi everyone. I hope you can all hear me. I hope you had a good weekend, and let's get straight into the stream. It's the first one we've done, which is like a public one. It's the first one we've done for quite a while now. So yeah, I'm hoping to get some feedback in the chats after. I know a lot of you guys sort of don't watch these live and you watch them after, and that's completely okay. But any questions you have, just fire over straight away. So in the chats, obviously, and I'll get back to you, some point this evening. So the first thing we're going to go through, rather than go through, I'm just organizing myself on chain, but the first thing we're going to look at is the macro. So the macro is still not great. We've still got this tightening cycle that's taking place. In the interest rates are going to keep being increased, more than likely until something in the markets breaks. Yeah, it's likely to be the case because the markets will basically break before inflation starts coming down, more than likely. So obviously we've had 8 weekly red candle closures now for Bitcoin. So we are due some relief in some form of rally. I think so. We have this week, this is a key start of the macro. So we have this week, we have Fed Chair Powell speaking tomorrow, and then we have the FOMAC minutes. So what this basically is we're looking at this to see these are the minutes that are being released from the last meeting, i.e. what was said, what was spoken about, what do they plan on doing. What we want to see here in this is that in the last speech, Fed Chair Powell was quite clear in that he was going to do 50 basis points at the next meeting, or they were looking to do 50 basis points at the next meeting and then do 50 basis points the following meeting. So if they do that's like the consensus, that's what's being priced in. So the markets are expecting that to happen, and that's sort of okay. So if we see that is the case, where they say we're not going to do 75 basis points at the next meeting, so coming up in June, the markets might take that as a good sign and get some relief. If there's murmurs or there's chit chat basically in here about them like seriously discussing a possibility of doing 75 basis points, I think the market might be spooked. So that's where I think this week we can basically get some relief from. And at this moment in time, people always send me, a lot of you guys, because we haven't done a free stream in a while, so I will explain. But a lot of you guys send me charts and you say, oh, what's my opinions on this chart or this chart or this chart. And all the TA is good. Or a lot of the time the TA is good. The technical analysis is good. However, what people aren't considering is the on-chain stuff and also the macro. The macro is the most important, followed by on-chain, followed by chart technicals. So the macro at this moment is what is putting liquidity either into the markets or taking it out of the markets. So if you have the Fed going through the money printing cycle that they were going through during COVID, then all of a sudden you've got the risk on assets just going crazy because there's so much liquidity in the markets. Now the opposite is in reverse, or the opposite is happening, and that money printer is in reverse, then all of a sudden risk on assets are going to take a serious pounding, in that they're not going to be able to get liquidity that they basically were getting beforehand, which is why we see prices have come down. Whenever there's a big drop, we don't get any sort of like, you might drop, say you drop 10%, for instance, you might then only get a 2 or 3% rally. Where before in the bull runs, if you drop 10%, you then go and get a 30-40% rally. So it just shows that there's such a lack of liquidity at this moment in time. So that's the macro. I'm going to keep it reasonably short and sweet. I don't want to take too much time with macro. I know a lot of you guys don't like it when I talk about the macro, even though it is the most important thing. But let's now look at the on-chain. So exchange net position change is showing some inflows of Bitcoin to exchange. That means people are selling. We had this big load of accumulation here. However, let me go into the addresses after. This accumulation is by the wrong cohorts. It's not by the cohorts we want to see accumulating. So now price has collapsed, and now you see some distribution back into the lower prices. They've accumulated higher, now selling into lower. So if we look at the exchange net flow volume, this shows us every single day what's happening. So red is significant outflows of Bitcoins from exchanges. We had a 30,000 print here, but the 2 days prior, we had a 52,000 print. So And you can see here, mostly, you are seeing some big red prints, but I just think, yeah, I just think this was really significant, and this came sort of as we were dropping, and that's what sort of tanked it all, and that was probably to do with the Lunar Guard Foundation selling their 84,000 Bitcoin to try and maintain the UST peg. But yeah, if we look at the addresses, we'll see who was accumulating and who wasn't. So addresses with balance greater than 0.1 Bitcoin. Let's scroll out a tad. So we can see all addresses with balance greater than 0.1 Bitcoin were climbing, were increasing, adding exposure. Addresses with balance greater than 0.1 Bitcoin, adding exposure. So adding a lot of Bitcoin here. I mean, look at the actual scale though. So it's not, it's a considerable amount of Bitcoin, but overall, what have you gone up in the last, since January 21, you've gone up from 3.1 million up to 3.5, so you've done a 10% move, and it's good, but it's not huge. It's not huge numbers. The scale is not massive. You've not gone from 1 million to 6 million Bitcoin. Do you know what I mean? It's still relatively small. So let's look at addresses balance greater than 1 Bitcoin. So these are really climbing high as well. So they've been accumulating at the lows. Addresses balance greater than 10 Bitcoin slowed down. Not really ever recovered the sell-off that we had down here. So we sort of have actually recovered. We've got to the same sort of point. Well, I'll tell you exactly. If we have 147,339, 147,420. So we're pretty much at the same level, but it's taken a lot of months really to recover. Probably 3 months to recover. But they're not drastically adding exposure, are they? They've added a bit, but they've not added serious exposure. Adjusted balance greater than 100 Bitcoin. So this is not a misprint, but it wasn't organic. So this was just a number of wallets being created, new wallets being created by exchanges to hold more balances, basically. So forget this big long line. So really we're seeing this choppy action really back down here. So they have been accumulating a bit in the last few weeks, but not a lot. It's not a great deal. Adjusted balance greater than 1K. Again, same story here. Forget the big line. It's not a misprint, but it's not organic. It was done by exchanges that created more wallets to hold more of their coins. And that was confirmed by the data provider. So we can see pretty much they've been, through here as well, they've really sort of de-risked. So they're not risking on at all, which tells you all you need to know. This here is probably the most profitable cohort. So that does tell you all you need to know, really. If we look at, there's one market indicator I wanted to show you. So this MVRVZ score, this tells you how far away, like how undervalued or overvalued, sorry, other way around, how overvalued or undervalued Bitcoin is in terms of its fair value. So the major green buy zone is the zone. So this is where the macro bottoms have been. So we have this one here, that was the end of the last that was the end of the last that was the end of the last bear cycle. We had it here during the COVID crash, and hopefully we're going to get it again here. This is what I'm waiting for. So a lot of you guys know in the group, or on the free side, you may know, we sold all of our positions in very early January. Got out of Solana when it was 147, Chainlink when I think it was like 31, Curve when it was up in the 6s still. So Curve was actually considerably before that, I believe, but that's where saving money there between now and then is when you have the real ammunition to buy when we reach this green zone again. So earning 10 times your money in a bull market is great, assuming you can cash out and keep the strong majority of that 10x. If you then hold through a bear market and you lose 80-90%, it was almost pointless being there in the whole time. That makes sense. So we cashed out in a really good level. Just been playing trades here and there. We had a couple of really good trades. I think a Curve trade and a Solana trade. But mostly we've been really conservative. But that is the way to go. And I mean, you wouldn't want it to be trading heavily during this period. You could have easily got caught offside so many times. So I definitely think we've done the right thing. The last thing we're going to look at is whale map. So this is a great chart. So this here is a realized price by address. Realized price by address visualizes the average price at which current unspent Bitcoins belonging to each category of addresses were purchased for. So you can see in the 2017 bull run, you get way above the average cost price. The average cost price rises as people buy in, of course. And then you come back, you test its support, test it. I'll move this out of the way. You kept testing its support, kept testing it. All of a sudden, these ranges in here, you crash below. And you tested this bottom. So the 10 to 100 Bitcoin wallets, their average price was 3,000. You pretty much tested there. We were close. Maybe we were a few percent off. But if we scroll back to other bear markets, this is a good example as well. In 2015, you sort of touched in, stayed above for a bit, and then crashed right below. And I mean, these are significant crashes. You've gone from $340 down to $184. So it's not quite a 50%, but it's just under a 50% correction. Here you went from 6,200, say, 6.3, down to 3.1. So that was a 50% correction. Bear in mind, at 6.3, you're already down from 20,000. If you got in at 17, 19, 20,000, you're already down a considerable portion. So if we scroll now, this is the COVID crash. So if we scroll through to now, you can see the cost basis have changed as we've come down. That's why it looks all a bit funky in here. But you can see we were on this level, touched it once, we've come down. We might have a couple months of touching it before a capitulation below. And I think we'll go somewhere in here between $18,000 and $24,000, somewhere in there. So that's effectively what we're waiting for. For me personally, this chart I think is really, really important. I think it's possibly the most important on-chain metrics chart there is. Simply, if you was just going to say to yourself, you know, I can only look at one chart, what would I choose to look at? It would be this. So this here I think is so important. And you can see in here now we're starting to get those touches, starting to find support on it, where buyers are coming in until we potentially get that capitulation move below. Maybe do a 50%, you know, you're at 30,000. Say you go and do a 40% correction. That takes you to what? What would that be? 15,000. It's about 20,000. In that 20,000, 21,000, I believe is. Might be more. No, I think it's about 18. 18, but I said 18 to 24,000 is our buy range. I think we get that support move and then a capitulation below. And I think it's filling the bids in there that it's really important. So that's what we're watching out for. Let's move on to the charts. Take a quick sip of my drink. Okay. So the first thing we start with is the SPX. So this is the S&P 500. This is basically why crypto has done so bad over the last few months, because stocks have come down, risk on assets have come down drastically. The best risk on asset I can probably give you, well, other than crypto, but is the ARK investment fund. Look how that's done since the start of 2022, down from 98 to 41. So they're down a good 60-odd%. And do you know what? Bitcoin-wise, I feel has held up really well. And considering when you see this is such a hugely traded asset, that you know, so is Bitcoin as well. But to know how volatile Bitcoin, and I was here in 2017 and 2018. I saw the volatility. I saw the how hard it was in the 2018, 2019 bear markets. And I see the liquidity this hasn't got and is really suffered with in ARK. And then I look at Bitcoin and I think to myself, even though we've seen this in the last, you know, couple of weeks, this has actually been okay. Yes, we've come down, but we held up in here pretty well, to be honest. But yeah, let's so you've seen that we're very highly correlated with the Nasdaq. So if the Nasdaq has a positive day, Bitcoin usually has a positive day. So there's a 0.95 correlation, which means 19 out of every 20 days are copied. Not copied, but are. If the Nasdaq does it, Bitcoin will follow it effectively. So let's look at Bitcoin now. So we broke down this major bear flag, and this, well, it's more of an uptrend channel rather than a bear flag. This is our target. It's somewhere in here. This white box is where I will fill, you know, my bids. I will probably play with 40 to 50% of my USDT in here. I will see what happens. If we go below, I'll buy more. honestly, at this point here, I don't ever become a seller. I become a buyer at this point. If we go down to 18, 19, I use that other 50, 60% of my capital to try and buy some form of like capitulation wick. That's the case of you being sat there on the computer. So, you know, this is my job every day. I can afford to sit here on the computer every day. So for me, I'm going to try and take advantage. Obviously, I'll post in the group if I'm doing it and all that kind of thing. But I want to keep some sort of ammunition on the side if we do that capitulation style event. And this wasn't really it, because you didn't have that. You usually get these like really big dirty wicks, so something like this. That was capitulation. That was very, you know, that was very similar to capitulation event. Well, it was, because you had extremely high leverage. This stuff, and this was pushed by derivatives because the leverage in the markets was so high. Whereas what we had here, this was just the spot selling effectively, and that was coming likely from the Luna Foundation, selling their Bitcoin to try and maintain the UST peg and basically keep Luna afloat. And now Luna's not afloat, which is why you don't see it on the watch list. But I think this is the overall level. As I said, I would put 40 to 50% of my USDT in the white box to fill orders. That's between 20. I'll actually draw some white lines so you can see where it comes across. And I'll post it, but it's between 24,000 and about 20,000, and I'll have orders all the way down to like 18, 19,000, very small ones, hoping to get some form of capitulation. And if that capitulation does come, I'll buy in with that 50, 60%. I probably won't, you know, I'll be sitting there trying to chase it pretty much, but I'll know that will be extremely low. And I'd like to think we can do a sort of a V-shaped recovery from there, end up staying between 24 and 30K. And that'll probably be the case for a few months as you build up some like momentum and stuff, and then you can make the move out. So that's my plan for Bitcoin. For now, we are in another bear flag. And I know a lot of you guys said this was a pennant, and I've been saying it's a bear flag. So today we had the supposed breakout of the pennant. This is a bear flag. This is where you touch the upper top border with the first move, and the second move touches the 50% line, but it never goes above this, and then above the first high, I suppose, and then it breaks down. So I do think we will get a relief. I do think this will invalidate, but and that's solely because I don't think we go here just yet. If we go here now, this would be still premature because the Fed still has to do its tightening. It would just be too early in the cycle to go. And I still, you know, we're a year into this bear market effectively now. I know we did an all-time high in November, but we are in a on-chain metrics wise, we've been in a bear market since May, and that's when all retail was flushed out and wiped out basically. So what was I saying? Yeah, I don't think we go here just yet. I think it takes another month or two first. Those are my thoughts, but I'm not 100% on that. I wouldn't even say I'm like 80% on that. I'd say I'm pretty like 60-40 on that being the case. So, you know, it can still happen basically. So don't take my word as gospel on it. Let's look at ETH. ETH literally in the exact same situation. Rejected today. There we go, we've got a perfect touch now. Rejected today, off the line, pretty much. This is most definitely a bear flag. Chances are this will break down. What I would love to see, but we did already get it really, is a move down, form a lower low, and then climb, but form that bull div. We did get one here, and that is on the dailies, which is why we've got probably some more positive moves up from 1900 to 2050, 2070. But overall, I think the FOMAC meeting minutes could be good for us, which is why I did the day trade for some of the experts today. But feelings are this, and I did say I was very transparent and said I'm not personally playing this because I just think it's too risky. I'm happy to sit on the sides and not trade for a couple of weeks, because, you know, during this kind of market, that's the best bet. It literally is just the best bet. But yeah, I think we need to get above and invalidate this flag and get above 2343. If we can get above there, I'll be looking at 2600 to short. Do I think we'll get there? Probably not. I don't think that there's any momentum in the market to take us there, to be honest. But, you know, in a month's time, I could be wrong. We could do that, and then a month after that, we could form that last capitulation wick down to like a 1400, maybe even a 1200 for ETH. And if that happens, you know, practically sell your own mother to buy Ethereum on that one. You know, I'm only joking, but you know, get as much money as you can to buy Ethereum. If we go to $1,000, $1,200, I'll be buying everything I can, really. So yeah, that's an update on ETH. FTT. So FTT was breaking out of this weird sort of pennant-like pattern, but obviously the market hasn't moved fantastically today, so you've got that little bit of rejection here. For now, I would just wait and see what this does. I wouldn't look to actively trade it. To be honest, I wouldn't be looking to actively trade anything. I'm not confident on anything at this moment in time, other than the macro picture. But in terms of like risk on assets, how they're trading, I'm not confident on any of these assets going higher. But they're all so low, so you don't want to short them either. So it's about working out your risk reward. At this moment, the reward is not greatly in your favor in comparison to where the risk sort of side of the metric is at. So for that reason, it's just not worth playing. If you want to play and you want to day trade and stuff, you know, you can do that. But it's, you know, you may as well just go to the casino. In fact, I think you'd have better odds at the casino because it is literally 50-50, and it's the psychological aspect isn't as like brutal on you mentally, especially when you're trading, because you feel like it's your fault, blah blah blah. So it's just very difficult. FTT, I would say we need to claim above 34.80. You know, it's a good 15% move. Whether or not we get there, I don't know. If we got into this range of 40 to 38, I would consider shorts. But you know, I'm asking for a good, pretty much a 30% move there. So I don't know what's going to give the market that momentum to actually do that. Yeah, just not feeling confident. Solana, another clear bear flag. Looks like it was trying to break out. Didn't do too badly. It sort of pulled back off its candle though. This is a shame because this one I wanted this to come up and get into the $70 to $80 region, because I just think it'd be an unbelievable short, especially for the last, you know, I think the macro is only going to be bad for a few more months, and then they'll have to still raise rates, but not do it so aggressively. And I think then people will say, oh, you know what, the worst is behind us. Let's put some risk back on, and you'll see a bit more liquidity come back into the markets, and that'll basically be a good sign for us, basically. So Sol was one of those ones I wanted to see it get that momentum, fill the orders between $70 and $80, and that would be a nice trade for us on the short side to then send it lower. At this price, it's not worth it. But if it comes up here and you can see it's getting some resistance into this like $75, $79 area, then yes, we can come down. So that's sort of what I'm waiting for, hoping for, praying for. But you know, I'm asking for a good 60% move here. So we will need some good news to come out for this to probably get enough momentum to do that move. And if we do get that news, I'll probably be doing more trades of buying this. So at this moment in time, we're waiting. It's just a really bad market. The liquidity is not there. We're waiting for some good news to come out. Yeah, and that's basically where we're at. It is frustrating, but you know, if you want to make the big money in the bull market, you have to be here in the bear market. If you want to make big money in the bull market, you have to know when to cash out and when to sit patient. And you have to sit patient for a long time. You know, this might be 6 months, 12 months of sitting patient. I don't think it's going to be another 12 months more. I think it might be an absolute maximum of 6 months more. But I think really it's going to be only like 1, 2, 3 months more. I really do, because I think the Fed will have done their most aggressive and hardest work between now and then, and you'll get these capitulation type bottoms between now and then. So those are my thoughts. But yeah, Sol's one of those ones I'm looking at, $70 to $80. Let's see if it gets there. BNB, a really nice move, starting to get some rejection into the horizontal resistance at 335. I'm hoping this can get to 382. If it does get to 382, I'll open up a short. So, you know, you're only asking for another 10-ish, 15%. You're only asking for another 15% more. If it can have a good day, then that would be great. Especially if you can get this move up to here. It will form a hidden bear div. Yeah, it will form a hidden bear div. So that will be really nice. And that I would definitely, if we can get, you could even consider between 360 and 380 to fill shorts. Obviously, smaller orders going up to bigger orders, so that your average entry price is higher, because obviously you want that for the short. For the long, you want your average entry to be lower, so you put the bigger orders towards the bottom of your supposed like fill box. Let's look at Matic. Matic just looks really like it's struggling, to be honest. Not interested. It's battling with this bottom horizontal resistance / support at 0.67. Just not interested. Looks really like it's struggling. Same story for Polkadot. It needs to get above 10.59 really. These are, look, Matic and Polkadot, they're just not even worth playing at these moments in time. If they did have a decent move, you'd want to short them. For now, just not interested. And you can see liquidity is just so poor. It's not getting any major moves. You know, yeah, we're just not liking it. It's so far down off the highs. You really have to be careful with what you're playing with, and you can just get these moves down from 13.22 to 10. That's a 30% decline in a day. You know, you don't really want to be having that. Chainlink, exactly the same, similar story. I think this is possibly breaking out of its pennant though. It might be nice for a bounce up. However, I don't feel confident because we didn't get the lower low, meaning we didn't get the bull div. So for this reason, I wouldn't bother playing this. This can probably be adjusted now. There is okay. AVAX just needs to get above 38. If it gets above 38, I may become interested. But for now, guys, these are not worth playing. You know, Bitcoin and ETH, they'll get some more liquidity, so those can be worth playing. But the others in the small caps, and today I got a few requests sent over to me about a few of the small caps, and just stay away from them, guys. I've been saying it for months and months and months. These smaller coins are going to lack liquidity so much. So when Bitcoin pulls back 5%, they'll pull back 8%. When Bitcoin recovers 1-2%, when Bitcoin covers 2-3%, they might recover 1%. You know, they're just so poor. And if you look at them, AVAX has actually done reasonably well. It's only down from all-time highs, 140, about 75%, where that's actually not too bad. Well, if you look at something like a Chainlink went to 50, is now 7.5, so it's down, you know, about 85% or something. So this is why, you know, we sold into this orange box here. It was a local orange box. So it wasn't as high as 31, sorry, it's around the 28 mark. But it's a damn sight better than still bag holding, and that's what we don't want to be, guys. We want to be, you know, constantly in the markets, constantly trying to educate ourselves, and not be those guys that are bag holders, because that's where you'll earn 10x in the bull market, and then you'll lose 90% in the bear market, and you'll have sat there for a year and been like, what the hell have I just done? I wasted my whole time to earn 10 times my money and then lose 90% of it. So I'm literally back to where I started. And that's what you don't want to be doing. So Curve did have a nice move today. And this didn't get the bull div. So I did do this as a trade in the group. And, well, no, I didn't do it as a trade in the group. What's going on here? Let me just close the RSI. So look, we can see it didn't get that bull div though. Lower low, lower low there. So you didn't get that higher low. I don't know how to, let's just clear that now. So the fact it's above $1.25 is very good, but I'm not buying this at any point. You know, it's already up from 107 to 137, so it's up a good 30%. But do you want to be a buyer here when you think Bitcoin still hasn't found its macro bottom yet? Probably not. So for that reason, again, I'm not interested in buying any of these until something good comes out on the macro level that I then feel, aha, this will bring some liquidity in. This will bring some momentum in. These are now worth playing. And then you play the setups like an Ethereum, like a Bitcoin, like the ones that, you know, the ones that will get liquidity. Even Solana, I think it didn't get the bull div, so you might be more cautious there. But you'll play something that did get the bull div. Curve didn't really, maybe none of them did, but you wouldn't play any of these. You wouldn't, like an Aave, you wouldn't play. Even though they've had some good moves, they can get some good moves, but overall, they're just, let's look at Aave, for instance. It'll be, you know, it's filling the top of its flag and touching the downtrend resistance. Now, you'd like to think this can break out, but overall, it's at $1.05, and it went to $6.50. So it's down a good 85, 90 odd percent. I can't even work that out in my head, but 650. It's down probably 85%. So these just aren't worth playing, and this will do this bounce, and to call these moves from here up to here are impossible, but to call from here down to here are quite doable. But in my mind now, do I think we go from here to here? No, I don't. Unless something good comes out. But if it does, we will be there to take advantage of it. And that's the whole point of markets. Stay patient until the right things come available, until the right news comes available, that your risk reward is now heavily in your favor. Then it's worth playing. Until then, don't get involved. But other than that, I think that's about it. As I said, I think we're due some relief. We're just waiting on something to come out that gives us that relief. And when everything's down a lot as well, so you don't want to be shorting. Even though we think over the next couple of months, things can go down a lot more. But overall, I think we're due some relief. Like we look at the crypto fear and greed index. Sorry, I just yawned. Look, it's been extremely low. I think where's the numbers? Look here. It's extremely low. We're due something. But let's see what we get. But other than that, that's it for the stream. I hope you guys enjoyed it. I hope it was helpful for you. And yeah, if there's any questions, just let me know in the chats in the Discord. I'm going to be on my laptop this evening, so I'll get back to you all. All I'll do now is quickly go get something to eat. And then I'll be on my laptop sitting on the sofa. I'll get back to all of your questions. What is it tomorrow? Tuesday tomorrow. So for Tuesday tomorrow, I'll upload some on-chain data. We'll get a fresh watch list out on Wednesday. We'll assess the information that comes out Wednesday night as well. So I'll do a market update for you guys pretty much live to see if we can get some good news out of it. Other than that, let's wait and see. But yeah, that's it. Enjoy your evening, guys. Any questions, fire over in the chats. Cheers, everyone.